So it's a new quarter four. Time to, I suppose, just take a step back and just reflect on what has happened over the past quarter three, that is. Firstly, Thabo, let's start off with you. Your views on Zimbabwe, because it was the best performing bourse last week, and overall in quarter three up 10.6%. What are you seeing in terms of key trends there and key movements on the market?
Look, Zimbabwe has been actually good afternoon. Let me start by greeting everyone. Good afternoon. Zimbabwe has been recovering quite a bit. I mean, I think you know, the news perhaps of election next year announced in, I think the proposal is for March 2013 for elections next year. I think some of that and a bit of political direction is perhaps helping to drive the market, give the market a little bit of direction. Unfortunately, volumes haven't been the greatest in Zimbabwe. We're still seeing quite low volumes, but I guess the money is still being pouring into some of the larger cap stocks. Delta has been a very good performer. Econet has been a very good performer. So the performance has been largely driven by the larger caps in Zimbabwe. But I guess it's quite positive, I think, because we've always I guess been waiting for positive news and a positive flows to be coming out of Zimbabwe.
What is your sense as to when we're going to see the real turnaround in the equity market? Because you speak to a lot of managers. Perhaps it's the proximity to Zimbabwe, but everyone says that Zimbabwe, in fact, is one of the most exciting markets. Would you agree with that comment?
Well, I mean, I think the story of the last 2 weeks has been, well, the last 3 weeks has been Delta really jumping up quite aggressively. The other share that quite, even though it's been going up marginally, was Econet. But Econet is one of those shares where it's been getting cheaper every day, and we're sort of waiting and hoping, when will this thing now to start to move.
And it looks like it has bottomed.
So, yes, so we saw Delta now moving aggressively, and now it's sort of, okay, when will Econet catch up? But it's essentially in the larger caps we're looking for direction on the market and waiting for things to
What
get
must
going.
your time horizon be with Zimbabwe, bottom line, if you're going to invest in these larger cap quality companies?
Well, I think that's a difficult call. With Econet, investors have been quite long suffering. I mean, the share's been trading sideways for probably going on 2 years now. So yeah, it's a difficult one to call. It's almost expected when you see it.
Yeah, your thoughts on that, Thabo?
Look, I mean, naturally, I think you have to watch elections. You have to wait for a catalyst in Zimbabwe. I think like everything else, Zimbabwe is waiting for some sort of political reform to give us direction. I think a lot of funds are sitting back. I mean, certainly we're sitting back. We're thinking, the level of political risk is a little bit too much for us to be putting in a lot more money in Zimbabwe. So certainly it's a question, I guess, of how long it takes to resolve the political situation. But I mean, right now, I think it's a perfect time to be in Zimbabwe in terms of valuations. You look at some of these companies. Econet is still the cheapest telco in Africa. Delta is also one of the cheapest breweries in Africa when you compare to its African peers like Nigerian breweries like ABL in Kenya. So the opportunities are there. I guess it's just a question of you buy in slowly, you wait, and I guess, as I say, it's a question of what happens in the macroeconomy and politics. And
that is going to be a waiting game for some time, one would think. Let's talk about Nigeria. Independence Day in Nigeria today, so of course a key day to reflect. Looking at the performance for quarter three, up 20.4% in local terms. Firstly, let's just take a look at one of the key developments in quarter three, the introduction of market making. Have we been able to assess at all the impact of that?
Well, it's been encouraging to see the Nigerian Stock Exchange being very proactive and innovative in what changes they've been implementing. One of the things they've done, introduced a couple of weeks ago, was market making, also allowing short sales and securities lending. They published a list of about 15 stocks that people could initially make markets in. We've tried to assess the impact of that. One of the biggest changes has been that they've changed the price limits from ±5% to ±10%, that the prices are allowed to move on a daily basis. So that's had a significant impact. The Nigerian Stock Exchange traditionally being one of the most volatile markets on the market. So it can move violently from one extreme to the other extreme. But so far, from our analysis at African Alliance, it seems that the biggest impact has been on the smaller caps. Some Nigerian bag manufacturing company, Fitson, the likes of those companies, and the large caps, they're probably already large and liquid enough that we haven't seen an immediate impact. And I think just the last point there is that having spoken with some of the market makers, they're still getting their their
Their
ducks
heads
in a
around
row.
how it all works.
So it's still early days for them.
Yeah. Let's talk about individual stocks. You know, noticeable gains. Dangote Cement up 5.8%. Of course, that would have an impact on the market.
Sure.
Overall, Unilever 9.3% to the good. Ashaka Cement, Cadbury's, Dangote Flour. What are your thoughts on those, you know, the strong performances you saw from those companies?
Look, I think the rally in Nigeria continues. Year to date, the market is up some 25–26%. So I think it's reflected obviously in the names you've mentioned. There was obviously a bit of corporate action in terms of Tiger Brands getting into Dangote Flour. So you saw that stock up well over 10% last week. The banking sector as well continues to run. So all across the board, I think with the exception of smaller sectors like the insurance sector, perhaps some of some of the sectors on the tail end. If you look at the larger consumer names, you look at the larger sort of banking names, financials. There's a general rally in Nigeria. So,
but what about general rally? What about the oil and gas sector? Because sentiment hasn't really improved there. There's still uncertainty, and then you've got Orlando falling 15.7% last week because of a possible rights issue. What are your thoughts on exposure at all in that space?
Look, we've been waiting now short of 2–3 years or even more for the petroleum industry bill to be passed. Now we understand it probably won't be passed again this year.
But is that reason enough not to invest in Orlando?
Yeah, I think it's not necessarily reason enough. I think the petroleum industry bill is meant to open up opportunities for a lot of these oil and gas companies, particularly the indigenous ones like Orlando. So when you have a situation where Orlando's share price has fallen so much and they're still doing a rights issue at these low valuations, it is, I guess, from an investor perspective, quite concerning. So there's still negative sentiment around what's happening in the oil and gas sector. Of course, the issues of subsidy removals, all these issues around payments to these major sort of oil and gas distributors in Nigeria is still an issue. But I think we need to see some sort of government reform, some sort of drive to assist these companies, I guess, come back and hopefully restructure their books. Yeah.
Where do you recommend exposure in Nigeria right now, Randolph?
Well, I mean, just
where do you guys have strong exposure to?
Just referring to the petroleum industry bill, I mean, that's something that's been on the cards for now going on 5 years. So and it's been tabled in front of government, the two houses. Last week, so they'll be discussing this over the next couple of weeks. So it's creating uncertainty, in terms of the shares that you can play, that you can use to get exposure to the Nigerian oil sector. Limited choice in terms of the local exchange. You'd rather want exposure to upstream as opposed to downstream activities. But in terms of general sector allocation in Nigeria, the banks. I think this is a crunch year for the banking sector. This is the year where they have to show that everything is working now. They've cleaned out all the legacy issues they had. So we've got high hopes for that sector. And then of course there's the industrial shares that provides exposure to the consumer sector, which remains a long-term secular trend in Nigeria. So that's your brewers, Nigerian breweries, Guinness. Well, consumer shares. If
I can just jump in here, what about the Nigerian consumer space versus perhaps getting exposure to East Africa through some listed companies in Kenya, for example, Ebel, British American Tobacco? What are your thoughts on that, Thabo?
That's an interesting point, because I think if you look at particularly a stock, as you mentioned, East African breweries, it serves the East African market, not just Kenya. Although it's listed in Kenya, they have operations in Tanzania, in Uganda and what have you. So if you look at the combined market, I think the opportunity set is much bigger as well for some listed Kenyan companies. But obviously you can't ignore the size of the consumer market in Nigeria, and I guess as well the growth of that market in Nigeria. So I mean, I think they're quite sort of large signaling effects when you see Tiger Brands as aggressive as it's been in Nigeria, when there are a lot more companies opening up. I mean, if you go to Lagos now, you'll see a KFC down the road. Yeah. UAC and Gala are still continuing to push the product quite aggressively. We're seeing now companies like Nestle putting in a new baby line, a new food line in their factory. So I think these things are important. And these companies are telling us, listen, the opportunity is here, and you might as well invest. So.
Yeah. Another area where there's uncertainty yet perhaps good entry points is Mauritius. It was in fact the worst performing market last week. SEMDEX down 1%, or the SEM7 rather, and the SEMDEX down 8 bips. What are your thoughts on exposure here? Do you go via the banks? Do you go via the very attractive, some might say, hotel stocks, or do you not touch it given the uncertainty right now?
Yeah, I mean, Mauritius finds itself in a difficult spot. I mean, it's obviously heavily exposed to Europe through the tourism industry, and the tourism industry has been suffering. Just last week, NMH announced that they're not going to pay a dividend.
And that stock down 9.1%
yes,
on the back of that.
Exactly. So it might be moving into territory where it's becoming attractive just because it's become very cheap. But probably still best to just wait a little bit and see what's happening. And then on the banking side, we saw MCB coming out with the results, provisioning up quite sharply. I think EPS down sort of 9 odd %. So it's a difficult environment for
tough space. Do you have any exposure there, Thabo?
We've got a little bit of exposure to Mauritius. I think over the long term, there are some names, the banking sector. Obviously, we're a bit disappointed with the numbers that came out last year from an MCV perspective. Clearly, I mean, I think it's a conversation we need to have with management. But certainly, the environment is tough, and even in the commentary, they did mention that they're starting to feel how tough the external environment has been. Question, I guess, is what the long-term strategy is. We know MCB are looking more towards expanding trade with the rest of the African continent. So I think we'll see how that plays out and how the strategy rolls out. But over the long term, I think Mauritius won't disappear. It's still an important financial hub for Africa and for Asia and for the region, I guess. So I think let's keep an eye on it. But as Randolph says, I think right now the negative sentiment is a bit too much, and it's probably not an area you wanna touch, I guess. Yeah.
Well, thank you so much both for coming in today. Thank you to Randolph Oosthuizen, Head of Research for African Alliance Securities. Of course, our guest host for the day, Thabo Ncalo, Portfolio Manager at Stanlib, taking us through the best and worst performing bourses in Africa last week.